Hello everyone, welcome to Education on Cloud. I'm Hemalata. Today we are going to discuss a subject accountancy for class 12th. Right? So in today's class we are going to discuss about important notes and it's going to be a quick revision of the chapter. Right? So this is about accountancy subject PUC, that is for class 12th, and in this class we are going to start with chapter number 1 and it's about what? Accounting for not for profit organization. So this is a chapter and about this chapter we are going to have a quick revision. Right? Firstly, we have to understand the basic concept is about what is a not for profit organization, and we simply call it as NPO. So non-profit organization. So let's discuss about this concept. So not-for-profit organization are those established to provide service to the society and its members for promotion of art, culture, sports, education and religion development. Right? So here we can understand not-for-profit organization are those established to provide service to the society. So they focus on providing the services to the society and its members for promotion of art, culture, sports, education and religion development. Right? It is not established for earning profit. So the basic idea that we have to understand when we talk about NPO is that this is established not for earning profit, right? That is, you can take an example of school, college, club, hospital, doctors, lawyers, engineer. So all this sector are going to provide services to the public, right? Then what are the objectives of not-for-profit organization? We call it as NPO. So here we have to understand about the objectives. The first objective is to provide the services to the society. Fine. The second objective is to promote art, culture, religion, sports and educational development. So this is the main objective, that why they have come up with this kind of not-for-profit organization. Their expectation is not to make money, rather their expectation or objective is to provide services, right? Then characteristics of not-for-profit organization, which we call it as NPO. Right? So let's discuss about the characteristics here. The first point here is that they do not earn profit, because it's a service oriented sector. So therefore the profit will not be expected by these kind of sector or this kind of organization. Secondly, it main sources of income. Then if they are not expecting profit, how do they manage the activities in such kind of organization? Is that there is a requirement of income. So their source of income is through donation, right, and also through subscription. Then government grants, okay, the money which is the fund which are provided under government grant. Then fee from members, right? So these are what we call it as the main sources of income. Fine. Then they prepare receipt and payment account for that, and income and expenditure account. This kinds of not-profit organizations also have to prepare these many accounts from the company. That is the receipt and payment account, then income and expenditure account, then balance sheet account. Then surplus of these organizations are not distributed among its members. So here we can understand that the surplus of these organizations will not be distributed among its members, because it's for the providing of services. Right? So now we have to understand the differences between profitable organization and not-for-profit organization. So first let us understand about profitable organization. So here we can understand its main objective is to earn profit. Right? The main objective of this organization, that is when we compare about with the profitable organization, their focus is to mainly earn profit. Right? Then the difference of assets and liabilities are what we call it as capital under profitable organization. Then it makes a profit and loss account to know profit or loss. So why do they prepare this profit and loss account? In order to know or understand what is the profit or loss of the organization. Then it also prepares trading account, profit and loss account and balance sheet. So this kind of profitable organization, they also take up the initiation of preparing these kinds of trading account, profit and loss account, and along with the balance sheet. Fine. Then this is for not for profit organization, which we call it as NPO. So under this you can understand the main objective is to provide service to the society. So the basic objective of not for organization, not for profit organization is that they focus only on providing services to the society. Fine. Along with that, the difference of assets and liabilities are what we call as capital fund. So here you can analyze the differences between assets and liabilities are what we call it as capital fund. Alright, then it makes an income and expenditure account to know surplus or deficit. So they have to prepare income and expenditure account to know or to understand surplus or deficit. Fine. Then it prepares the receipt and payment account, income and expenditure account, and balance sheet. Right. So here we can understand that this is also focusing on preparing not only this is trading and or income and expenditure account. They also have to prepare again receipt and payment account, income and expenditure account, and also the balance sheet, though their income of sources is through donations, all those things. Fine. Then what is a receipt and payment account? So let's discuss about this. Receipt and payment account is the summary of cash book. So we say this as what? A summary of cash book. It is prepared by not-for-profit organization to know closing cash or bank balance. So here you can understand it is prepared by not-for-profit organization in order to know the closing cash or bank balance. Fine. Then following are its characteristics. So under this you can understand it is a real account. So this can be considered as what? It's going to be considered as a real account. Then it is prepared on a cash basis. Right? This will be prepared on the cash basis. Then it starts with opening cash or bank balance. Right? Then all capital and revenue receipts either current year. So they also say that all capital and revenue accounts either current year, previous year, and following year are recorded in the left side, or we also call it as receipt side. Fine. Then all capital and revenue expenditure either current year, previous year, and following year are recorded in the right side or expenditure side. Fine. So this also gives you an information that all capital and revenue expenditure either it might be related to current year, or it might be related to previous year, or it also might include following year will be recorded in the right side or expenditure side. Fine. Then non-cash expenses or loss and non-cash income or gain are not recorded anywhere. So we can analyze here that non-cash expenses, or what we call it as loss, and non-cash income or gain will also be recorded are not recorded anywhere. So these items will not be recorded anywhere, right? Then its main objective is to know the closing cash or bank balance. So the main objective of this is to know the closing cash or bank balance. Fine. Then difference between receipt and payment account and cash book receipt and payment account. So under this you can understand that it is prepared by the not-for-profit organization. So this is the first difference that we have to understand, that it is prepared by what? Not-for-profit organization. Then it is a summary of cash book, we can say. So this can be considered as what? Summary of cash book, and along with that there is no column for ledger folio. So under this you can also notice that there will be no column for ledger folio. Fine. Then left side is known as receipt side and the right side is known as the payment account. So you can also understand that left side is known as what? Receipt side, right? And the right side is known as the payment account. Fine. Then entries are made in classified form. So whatever the entries that we make, that will be done based on classified form. Fine. Then cash book. It is prepared by not-for-profit organization. So here you can understand this is prepared by not-for-profit organization and profitable organization both, right? And it is prepared on a daily basis. And we can also understand that this cash book, there are separate columns for ledger folio. Fine. Then left side is known as debit side and right side is known as credit side. So this is also an important thing that we have to understand. Whatever the left side we have, we call it as debit side, and the right side is what we call it as credit side. Fine. Then entries are made in chronological order. Okay, that is based on the date. It has to be arranged in a chronological order. Fine. Then what is an income and expenditure account and its characteristics? Right, under this, income and expenditure account is a nominal account. So we call income and expenditure account as what? Nominal account. It is prepared by the not-for-profit organization to know surplus or deficit. Right. So this is prepared by the not-for-profit organization. Why do they prepare it? In order to know the surplus or deficit. Fine. Then following are its characteristics. So under this, it is a nominal account. So we can say understand this as nominal account. Then it is prepared on accrual basis. So this is also prepared on what? Accrual basis. Then in the debit side of income and expenditure account, we record all the revenue expenditure of only the current year. So you should also understand that in the debit side of the income and expenditure account, we are going to record all revenue expenditure of only the current year, not the any other year information. Fine. Then in the credit side of income and expenditure account, we record all revenue income of only the current year. So we can also understand that if the in the credit side of the income and expenditure account, we record all kinds of revenue income of only the current year. Fine. If the income is more than expense, the difference is what we call it as surplus. Then if the income is less than the expense, the difference is what we call it as deficit. Fine. Then its main objective is to find out surplus or deficit. So its main objective is what? To find out surplus or deficit. Then it is prepared just like a profit and loss account. So we can also understand that it will be prepared on a profit and loss account based on that. Right. Then difference between income and expenditure account, profit and loss account and income and expenditure account. So let's understand about this. So all these three, it is prepared by non-profitable organization. And its main objective is to know what surplus or deficit of the particular account, right? Then the left side is what we call it as expenditure side and the right side is what we call it as income side. Fine. Surplus are not withdrawn by its members. Whatever the surplus that they incur, so those surplus will not be withdrawn by the members, right? Then profit and loss account. So it is prepared by a profitable organization. So profit and loss account will be always prepared by this profitable organization. Its main objective is to know net profit or net loss. Then left side is what we known as debit side and the right side is known as the credit side. Fine. Then profits are withdrawn by partners or shareholders. So again you can also understand that profits are withdrawn by partners or shareholders. Fine. Then fund based accounting. So its example and objectives are fund based accounting is a technique of bookkeeping under which separate self balancing set of assets, liabilities, income and expenditure are maintained for each fund for a specific purpose. So that might include a match fund, sports fund, prize fund, etc. Fine. Following are the objectives, right? To compare the actual result with the budget, then assess the financial performance during the year, and also to ensure the rules and regulations are adopted. Whatever the rules and regulations they have to make sure that all that is adopted. Fine. Then to assess the efficiency of the organization, if the funds are more than expenses, it will be shown in the liabilities side of the balance sheet. If the funds are less than the expenses, it will be shown in the expense side of the income and expenditure account. Fine. Then what is legacy? So let's understand about this. It is a kind of donation. So we call legacy as what? A kind of donation which will be shown on the liability side of the balance sheet. It is a capital receipt, we can say. Fine. Then what is an endowment fund? So here it is a fund which provides permanent means of support for any person or institution. So we can understand endowment fund as what? It can be considered as a permanent means of support for any person or institution. It is a capital receipt which will be shown on the liability side of the balance sheet. It is either deposited in a bank or invested in security. Fine. Then what is a life member fee? Right? It is paid only once in a lifetime by the member. It is a capital receipt shown in the liability side of the balance sheet. So you can also understand that it is what? A capital receipt shown in the liability side of the balance sheet. Fine. Then what is honorarium? It is an amount that is paid to those people who are not employees of the organization, is what we call it as honorarium, and it is also considered as a revenue expenditure. It will be shown in the expenditure side of the income and expenditure account because it's going to be an expenses. Right. Then steps to take for conversion receipt and payment account into income and expenditure account. So let's understand about what are the steps that we have to take. Firstly, we can say opening cash and bank balance are not recorded anywhere. So opening cash and bank balance will not be recorded anywhere. Then closing cash and bank balance are not recorded anywhere. Again, you have to understand that closing cash and bank balance are not recorded anywhere. Fine. Then capital receipt and capital expenditure are not recorded anywhere. Such as life member free, legacy, specific donation, endowment fund, purchase of fixed assets, sale of fixed assets, purchase of investment and sale of investment. Fine. Then only current year revenue receipt and expenditure are recorded. So you can also understand that only current year revenue receipt and expenditure will be recorded in this. Right. Non-cash expense and non-cash income are also recorded. So you can also understand that in this non-cash expenses what we come across and non-cash income will also be recorded in this. So by this we are going to complete today's session. Thank you.